Hello friends, this is Victor here. Welcome back to the Intelligent Investor channel. Many members ask me to analyze AMD stock again because AMD stock has dropped a lot over the past 1 year. So in this video, I'm going to analyze AMD stock and explain why I believe AMD stock will eventually recover. Moreover, I will explain whether AMD stock is undervalued now. As always, I would like to give you more context first. Earlier last year, I told my Patreon members that I sold all my AMD shares several times near the peak and made some great gains. I sold AMD because I calculated AMD's intrinsic value and I realized that AMD was overvalued during that time. Fast forward to today, AMD has dropped quite a lot over the past 1 year, mainly because AMD's AI GPU business has not met investors' expectations yet. Last year, many investors were betting that AMD would become the next Nvidia. Investors were betting that AMD's AI GPU business would grow very quickly just like Nvidia. After selling AMD near the peak last year, I actually bought back AMD shares many months later because I believe AMD has become undervalued again. Right before I started making this video, AMD reported strong earnings for 2024. However, AMD's data center business did not meet investors' expectations. AMD did not give investors an AI revenue guidance for 2025. So investors are concerned that AMD may not be able to grow its AI GPU revenue from $5 billion in 2024 to as much as $10 billion in 2025. So in this video, I'm going to explain why I believe AMD stock will eventually recover. I will explain why I believe AMD is likely undervalued now. You will learn about these topics in this video. Will AMD's AI business return to growth? AMD versus Intel, AMD versus ARM Holdings, AMD stock valuation, and whether I plan to buy more AMD stock going forward. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing analysis videos every week that will help you become a great investor. Each video usually takes me more than 30 hours to make, so if you like this channel and want to support it, check out my Patreon blog in the video description. Our goal is to help all our members become multi-millionaires through investing. Once you become a premium member, you can follow all the stocks I'm investing in for the long term, follow my personal stock portfolios, and download the latest intrinsic valuation models for all the stocks I'm analyzing, so you will know when a company becomes undervalued, fairly valued, or overvalued now. Also, you will have access to all my latest stock ratings for all the stocks I'm analyzing. The link is in the video description. Take a look, let's start. So will AMD's AI business return to growth starting this year? This is the most important question to ask because AMD's most important business is its data center business now, just like Nvidia. I believe AMD's AI business will eventually return to growth starting in the second half of 2025 or the first half of 2026 because of AMD's upcoming AI product roadmap. First of all, if you want to understand whether AMD will recover, we have to look at AMD's most important businesses. AMD has these four major business segments: the data center business that includes AI GPUs and EPYC server CPUs for data center customers, the client computing business that includes high-performance Ryzen CPUs and APUs for consumers and commercial customers, the gaming business that includes consumer GPUs and custom gaming processors for game consoles, and the embedded business. Similar to Nvidia, the data center business has become AMD's most important business and the largest growth driver because of the very large demand for AI GPUs and server CPUs that are more performant and more energy efficient. According to the most recent financial reports, AMD's data center business has already contributed half of the company's total revenue and the most operating income compared to client computing, gaming, and embedded businesses. Moreover, AMD's data center business also had the highest year-over-year growth rate because AMD has been taking a lot of market shares from Intel in recent years. AMD's EPYC server CPUs have been much more competitive in performance, core counts, and energy efficiency compared to Intel Xeon server CPUs. More on this later. AMD's MI300 AI GPUs have become the largest growth driver in the data center business since early 2024. However, AMD's AI revenue has slowed down in recent quarters, mainly because AMD's latest AI GPUs are not as competitive as Nvidia's last-gen Hopper platform and Nvidia's current-gen Blackwell platform. Another issue is that AMD did not give AI revenue guidance for 2025. This indicates that AMD may not have strong AI revenue growth this year until AMD releases the next-gen MI350 AI GPU in the middle of 2025. Going forward, I think it's more realistic to assume that AMD's AI revenue will not grow at all until the second half of 2025. Let me show you the most important parts of AMD's recent earnings call. AMD's management stated that they believe AMD will be able to grow its AI revenue from $5 billion in 2024 to tens of billions of dollars of annual revenue over the coming years. AMD knows that it's far behind Nvidia in the AI data center market. At the time of making this video, AMD cannot compete with Nvidia in AI software stack and large clusters of rack-scale AI systems. So to get to tens of billions of AI revenues each year, AMD will need to release the MI350 platform in the middle of 2025 and MI400 in 2026. AMD will need to introduce rack-scale AI systems that can compete with Nvidia's Blackwell AI systems and the next-gen Rubin AI systems. AMD's management said this.
Looking ahead, our next generation MI350 series featuring our CDNA 4 architecture is looking very strong. CDNA 4 will deliver the biggest generational leap in AI performance in our history, with a 35x increase in AI compute performance compared to CDNA 3. The silicon has come up really well. We were running large-scale LLMs within 24 hours of receiving first silicon, and validation work is progressing ahead of schedule. The customer feedback on MI350 series has been strong, driving deeper and broader customer engagements with both existing and net new hyperscale customers in preparation for at-scale MI350 deployments. Based on early silicon progress and the strong customer interest in the MI350 series, we now plan to sample lead customers this quarter and are on track to accelerate production shipments to mid-year. As we look forward into our multi-year AMD Instinct roadmap, I'm excited to share that MI400 series development is also progressing very well. The CDNA Next architecture takes another major leap, enabling powerful rack-scale solutions that tightly integrate networking, CPU, and GPU capabilities at the silicon level to support Instinct solutions at data center scale. We designed CDNA Next to deliver leadership AI and HPC flops while expanding our memory capacity and bandwidth advantages and supporting an open ecosystem of scale-up and scale-out networking products. We are seeing strong customer interest in the MI400 series for large-scale training and inference deployments and remain on track to launch in 2026. For 2025, we expect the demand environment to strengthen across all of our businesses, driving strong growth in our data center and client businesses and modest increases in our gaming and embedded businesses. Against this backdrop, we believe we can deliver strong double-digit % revenue and EPS growth year over year. Looking further ahead, the recent announcements of significant AI infrastructure investments like Stargate and latest model breakthroughs from DeepSeek and the Allen Institute highlight the incredibly rapid pace of AI innovation across every layer of the stack, from silicon to algorithms to models, systems, and applications. AMD is the only provider with the breadth of products and software expertise needed to power AI from end to end across data center, edge, and client devices. We have made outstanding progress building the foundational product, technology, and customer relationships needed to capture a meaningful portion of this market. And we believe this places AMD on a steep long-term growth trajectory led by the rapid scaling of our data center AI franchise from more than $5 billion of revenue in 2024 to tens of billions of dollars of annual revenue over the coming years. Going into 2025, as I mentioned in the prepared remarks, we're actually, very happy with the progress that we're making on both the hardware roadmaps and the software roadmaps. So on the hardware side, we launched 325 at the end of the fourth quarter, started shipments then. We have, new designs that have come on both 300 and 325 that will deploy in the first half of the year. And then the big news is on the 350 series. So we had previously stated that we thought we would launch that in the second half of the year. And, frankly, that bring up has come up, better than we expected. And there's, very strong customer demand for that. So we are actually going to pull that production ramp into the middle of the year, which improves our relative competitiveness. So as it relates to, how data center, so the overall data center business will grow strong double digits. Certainly both the server product line as well as the data center GPU product line will grow strong double digits. And from the shape of the revenue, you would expect that the second half would be stronger than the first half, just given 350 will be a catalyst for the data center GPU business. But I think what we look at is, certainly for the first year of the data center GPU business, we wanted to give some clear progression as it was going. The business is now at scale, actually now at over $5 billion. And as we go into 2025, I think our guidance will be more at the segment level, with some color as to some qualitative color as to what's going on between the two businesses. And relative to your question about long-term growth rates, you're absolutely right. I mean, I believe that the demand for AI compute is strong, and we've talked about a data center accelerator TAM, upwards of $500 billion by the time we get out to 2028. I think all of the recent data points would suggest that there is strong demand out there. Without guiding for a specific number in 2025, one of the comments that we made is, we see this business growing to tens of billions as we go through the next couple of years. And that gives you a view of the confidence that we have in the business. And particularly, our roadmap is getting stronger with each generation, right? So MI300 was a great start. 350 series is stronger and addresses a broader set of workloads, including both inference as well as training. And then as we get into MI400 series, we see significant traction and excitement around what we can do there with rack scale designs and just the innovation that's going on there. So yeah, we're bullish on the long term, and we'll certainly give you progress as we go through each quarter in 2025.
Let's take a look at AMD's biggest competitors in the AI accelerator market. Nvidia is AMD's biggest competitor in the AI accelerator market or the AI data center market. Nvidia has a near monopoly in the AI accelerator market. Based on analyst estimates, Nvidia owns around 80% to 90% of the AI accelerator market. For AMD to grow its AI revenue from $5 billion in 2024 to tens of billions each year in the upcoming years, AMD will need to improve its AI software stack much more and release much more competitive AI systems, such as the MI350 and MI400 that can compete with Nvidia's Blackwell Ultra, Rubin, and Rubin Ultra platforms. Based on what I know, AMD is several years behind Nvidia in rack-scale AI systems that can scale to hundreds of thousands of AI GPUs across a single networking fabric. AMD is also many years behind Nvidia in the AI software stack. It is nearly impossible to compete with Nvidia's CUDA software platform because CUDA is proprietary to Nvidia and is well supported by millions of developers around the world. More importantly, CUDA is the gold standard for AI workloads such as AI training and AI inferencing. Nvidia also has the most users. This is why most developers and AI labs choose to build their AI models and AI applications on Nvidia's architecture instead of AMD's architecture. Intel is not relevant at all in the AI data center market. Intel is essentially a sinking ship that will need to be bailed out by the US government. I said this in my previous videos. No major companies want to buy Intel's AI chips. This is why Intel has recently cancelled its next-gen Falcon Shorts AI GPU. Intel knows that it cannot compete with Nvidia and AMD in the AI accelerator market. Other than Nvidia, AMD also competes with Broadcom and Marvell. Broadcom and Marvell make custom ASIC AI accelerators for hyperscalers such as Google, Microsoft, Meta, ByteDance, and OpenAI. Based on what I know, Broadcom is the market leader in making custom ASIC AI chips for hyperscale customers. In my previous AMD stock analysis videos, I made a mistake in my thesis. I initially thought that AMD would be the best alternative to Nvidia. I thought that most hyperscalers would buy AI GPUs from AMD if they cannot buy the most advanced AI systems from Nvidia, or if they find that Nvidia's Hopper or Blackwell systems are too expensive. However, I realized that the best alternative to Nvidia's AI systems is making custom ASIC AI accelerators, because custom ASIC AI chips can reduce the cost of training and inferencing AI applications depending on the specific workloads. This is why most hyperscalers such as Google, Meta, Microsoft, Amazon, and OpenAI are developing their own custom ASIC AI chips because they don't want to rely 100% on Nvidia. Broadcom is the market leader in custom ASIC AI chips for hyperscalers such as Google, Meta, ByteDance, and OpenAI. According to Broadcom's recent earnings call, Broadcom CEO Hock Tan stated that Broadcom's serviceable addressable market, or SAM, in the AI market will likely reach $60 billion to $90 billion a year by 2027. In comparison, Broadcom's AI revenue was $12.2 billion in 2024. I think it's very important to understand this because it shows that making custom ASIC AI accelerators is likely the best alternative to Nvidia's AI systems. However, the biggest downside is that these custom ASIC AI accelerators do not come with software, GPU accelerated libraries, and optimization tools like Nvidia's CUDA. This means only very few large companies can afford to develop these custom ASIC AI chips and at the same time spend hundreds of millions of dollars or even billions of dollars to develop the software to work on these ASIC AI chips. Based on what I know, these custom ASIC AI chips are meant for specific workloads. They are not very programmable across many different applications like Nvidia's AI GPUs and AMD's AI GPUs. This is why I believe Nvidia's AI systems with CUDA will still dominate the AI server market in the long run. To compete with Nvidia and custom ASIC AI chips, AMD is planning to release its upcoming MI350 AI GPU earlier by the middle of 2025, followed by the MI400 AI GPU by 2026. But here's the important part you should know. At the time of making this video, AMD cannot compete with Nvidia in large rack-scale AI systems. For example, Nvidia is already mass producing its Blackwell GB200 NVL72 AI system that connects 36 Grace CPUs and 72 Blackwell GPUs in a rack-scale system. At the time of making this video, AMD does not have any rack-scale AI solutions that can compete with Blackwell. This is why AMD is acquiring CT Systems, which is expected to be completed in the first half of 2025, so that AMD can compete with Nvidia in large rack-scale AI systems going forward. This is my prediction. Realistically, I believe the AI accelerator market will be similar to the discrete GPU market that is dominated by Nvidia. The main difference now is that custom ASIC AI chips as a group will likely be the second largest player, followed by AMD being the third largest player. Similar to the consumer discrete GPU market, I believe Nvidia will continue dominating the AI accelerator market and maintain over 80% of the AI server market because of Nvidia's proprietary CUDA and AI software stack. Custom ASIC AI chips as a group should be the second largest player, and AMD should be the third largest player. If I were to make an educated guess, I believe AMD will probably capture around 5% of the AI accelerator market in the long run. There are several hints. First, AMD's management expects that AMD should be able to grow its AI revenue from $5 billion in 2024 to tens of billions in annual revenue in the upcoming years. In the short term, if I have to make an educated guess, I believe AMD's AI revenue will probably reach somewhere between $5 billion and $10 billion in 2025. I believe AMD's AI business will eventually return to growth again, starting in the second half of 2025 or the first half of 2026, once AMD releases the MI350 and MI400 platforms with large rack-scale AI solutions like Nvidia's Blackwell. Second, Broadcom's AI revenue was $12.2 billion in 2024. Broadcom's management expects that its AI serviceable addressable market, or SAM, will likely reach $60 billion to as much as $90 billion a year by 2027. And third, Nvidia's AI revenue is expected to reach slightly over $100 billion in 2024. This year, Nvidia's AI revenue is expected to be as high as $190 billion. Of course, Nvidia will maintain its dominant position in the AI server market by releasing its Blackwell Ultra platform in 2025, the Rubin platform in 2026, and the Rubin Ultra platform in 2027. Now let's take a look at AMD versus Intel. I will explain why AMD will continue capturing more market shares from Intel in both the data center CPU market and the consumer CPU market over the next several years. There are several reasons. First, I predicted that Intel will continue losing market shares and falling behind competitors about 4 years ago. In my previous Intel stock analysis videos, I said that Intel was a value trap because Intel was well behind AMD, Nvidia, and Apple in chip design and several years behind TSMC in process node technologies and mass manufacturing of leading-edge chips. Fast forward to today, my prediction about Intel has become true. Now, Intel is no longer competitive in all the major businesses: AI accelerators, server CPUs, consumer CPUs and APUs, consumer GPUs, and semiconductor foundry. Intel will likely need to split into two businesses, chip design and chip foundry. This is because Intel does not have enough capital to support all its businesses. Specifically, Intel's chip design business can no longer sustain the substantial quarterly losses of its foundry business. For example, starting this year, the operating income and cash flows from Intel's chip design business will not be enough to offset the foundry business billions of dollars in losses. I will talk about Intel in a separate video. I believe this will benefit AMD because Intel does not have the money to support all its businesses. Based on what I know, some of Intel's largest customers have already switched to AMD in recent years because they know that Intel's high-end CPUs are not competitive at all in terms of both performance and energy efficiency. Second, Intel is still 1 to 2 generations behind AMD in high-performance CPUs, especially in the data center market. At the time of making this video, Intel has been losing a lot of market shares to AMD because Intel Xeon server CPUs have not been able to compete with AMD's last-gen EPYC server CPUs. Based on what I know, AMD's recent EPYC CPUs have been much more competitive than Intel server CPUs in terms of performance, core counts, and energy efficiency. For example, during the recent earnings call, AMD's management said that AMD has been getting more market shares from Intel. Intel cannot compete with AMD's last-gen Genoa and Milan server CPUs.
Yeah, first, we always assume server CPU is a very competitive market, but we currently have the best lineup of portfolio from not only Turin generation, but Genoa, and then even Milan. We provide the best TCO for our customers based on the product portfolio. So overall, we are actually quite confident about continue to drive the server CPU business, not only growing from a unit perspective, ASP perspective, and continue to gain share.
Here's the important part you should know. This year, AMD has already started ramping up its latest Turin EPYC CPUs for data center customers. On the other hand, Intel's next-gen Clearwater Force Xeon CPU, which uses Intel's latest 18A process node, has been delayed again to the first half of 2026. This means Intel's latest server CPUs will continue to be at least 1 to 2 generations behind AMD again. This is why I believe AMD will continue getting more market shares from Intel in the data center market over the next 2 to 3 years. Intel will have no choice but to lower its CPU prices in order to maintain its market share in the data center market. Let me show you the latest market share data. At the time of making this video, AMD has around 36% of the revenue share in the server CPU market, around 27% of the revenue share in the desktop CPU market, and around 22% of the revenue share in the laptop CPU market. This shows that AMD still has a lot of market shares to gain over the next several years. Again, Intel will have no choice but to lower prices if it wants to maintain its market shares in both the data center CPU market and the consumer CPU market. If you want to know how well AMD's client computing business is doing, you can search for the best-selling CPUs on Amazon. At the time of making this video, you can see all the top 10 CPUs are AMD CPUs. Intel CPUs are not even in the top 10 list. This indicates that Intel will continue losing even more CPU market shares to AMD in the upcoming quarters. You may wonder, what about ARM-based processors? Will ARM-based processors take away AMD's x86 CPU market share in the long run. One of the biggest concerns is that all the hyperscalers such as Nvidia, Amazon, Google, and Microsoft are making their ARM-based CPUs for their data centers because ARM-based processors are generally much more energy efficient than Intel and AMD's x86 CPUs. According to this market research, the global ARM-based servers market is expected to grow at a CAGR of 14.3% from 2024 to 2030. Now, I cannot predict how much market shares ARM-based processors will have over the next several years. However, I believe that x86 processors will continue dominating the CPU market in the long run because x86 CPUs are becoming more energy efficient and they are generally much more performant than ARM-based processors. Moreover, most applications and server workloads are developed for Intel or AMD's x86 processors. Hyperscalers always consider the total cost of ownership or TCO when they decide to invest in x86 processors or ARM-based processors. Even if ARM-based processors are more energy efficient, companies will still need to invest at least millions of dollars if they want to optimize their apps and server workloads to work on ARM-based processors. Based on what I know, it's a lot of work and time consuming to convert applications that run well on x86 processors to work on ARM-based processors. This is why I believe x86 processors will continue dominating the CPU market in the long run. Let's take a look at AMD's financials and long-term growth rates so you'll know whether AMD will eventually recover. Over the past 10 years, AMD has had fairly consistent revenue growth. However, AMD's operating income growth and free cash flow growth were much more cyclical. The main reason is that AMD's revenue was largely dependent on sales from consumer CPUs, gaming GPUs, and custom processors for gaming consoles. Going forward, as I mentioned earlier, AMD's revenue will be mainly dependent on its data center business and its client computing business. Typically, the data center business is much less cyclical than other businesses. This revenue forecast is from stock analysis. Over the next 3 years, AMD's revenue is expected to grow by around 25% year over year in 2025. Then AMD's revenue is expected to decelerate over the next 2 years. I think these revenue growth rates are reasonable because AMD will likely capture more market shares from Intel over the next several years. Now, if AMD's upcoming MI350 and MI400 AI GPUs capture more market shares, then this revenue and EPS growth rates will likely be slightly higher over the next 3 years. This consensus forecast is from Seeking Alpha. This year, AMD's revenue is expected to grow by around 23% year over year. Then AMD's revenue growth is expected to decelerate over the next 2 years. In terms of EPS forecast, AMD's EPS is expected to grow by as much as 43% year over year this year. Then AMD's EPS growth is expected to decelerate more over the next 2 years. Let's take a look at AMD's valuation. Based on AMD's forward P's over the next 2 years, I believe AMD is likely undervalued now. For example, AMD's forward PE is expected to be around 24 this year. Next year, AMD's forward PE is expected to be around 18. These forward PEs are exceptionally low if we compare them to AMD's expected EPS growth over the next 2 years. In fact, at the time of making this video, AMD's forward PE EPS growth rates are even higher than Palantir's forward EPS growth rates, while its valuation is much lower than Palantir's. Right now, I'm building this investing app with a friend. This investing app will be out this year. This is a preview. The orange line represents AMD's fair value over time. AMD's fair value has decreased over the past year because AMD's AI business has slowed down in recent quarters. The blue line is AMD's share price. The green line is the analyst average price target for AMD. We also have a price target here, which is around $155 per share. At the time of making this video, AMD's share price is still well below its fair value of $126 per share and our price target of $155 per share. This means AMD stock is likely undervalued now. I also calculated AMD's interest value using this interest values model. I always use this interest values model to calculate each stock's interest value, so I know when a stock becomes undervalued, fairly valued, or overvalued. If you want this interest values model, you can download it from my Patreon blog. The link is in the video description. These are the key assumptions in this calculator. First, I define AMD's intrinsic value as its future free cash flows discounted to the present day. I used a discount rate of 10.5% here. You can use a higher discount rate here if you want to be more conservative. Based on the competition, the product roadmap, and the expected long-term growth rates I talked about earlier, I believe AMD's value will grow at a compound annual growth rate or CAGR between 12.5% and 17% over the next several years. My base case scenario is that AMD's value will grow at a CAGR of 15% over the next several years. This is slightly lower than the consensus value estimates I showed you earlier. I use a long-term growth rate of 8.5% to calculate the terminal value. I think this is reasonable for a high-growth semiconductor company like AMD. Typically, the overall semiconductor market, excluding the memory market, tends to grow by around 9% to 10% each year over the long term. If you want to be more conservative, you can use a lower long-term growth rate to calculate the terminal value. Over the next several years, I'm assuming AMD's free cash flow margin will improve gradually over time. Let's go over these three case scenarios: worst case, normal case, and best case scenarios. Under the worst case scenario, we forecast that AMD's value will grow at a CAGR of 12.5% each year over the next several years. Then AMD's intrinsic value should be around $199 billion for the entire company, or $122 per share. I'm giving this scenario a 25% probability here. Under the base case scenario, we forecast that AMD's revenue will grow at a CAGR of 15% each year over the next several years. Then AMD's intrinsic value should be around $221 billion for the entire company, or $135 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we forecast that AMD's revenue will grow at a CAGR of 17.5% each year over the next several years. Then AMD's intrinsic value should be around $245 billion for the entire company, or $150 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, AMD's intrinsic value should be around $135 per share. I also use a forward sales ratio model to estimate AMD's intrinsic value, which should be around $222 billion for the entire company, or around $136 per share. If we take the average of both ratio models, I believe AMD's intrinsic value should be around $136 per share. To compare, Morningstar has given AMD a slightly higher fair value of $140 per share. This means I believe AMD is greatly undervalued now. So will I buy AMD stock? My answer is yes. I will likely buy more AMD shares over time because I believe AMD's AI GPU business will eventually return to growth again and capture a very small percentage of the AI accelerator market. As I mentioned earlier, I sold my AMD shares near the peak earlier last year. Then I bought back AMD shares several months later because I believe AMD has become undervalued again. I'm essentially betting that AMD's upcoming AI product roadmap, including the MI350 and MI400 platforms, will help its AI business return to growth starting in the second half of 2025 or the first half of 2026. My best guess is that AMD will probably capture around 5% of the AI accelerator market in the long run. So this is my plan right now. This is not financial advice. This is one of my investment accounts. I also have other investment accounts. I will maintain only a very small position in AMD stock to reduce risk. My current AMD weighting is around 1.5%. And if I buy more AMD stock, I will limit its weighting to a maximum of 2%. Once AMD recovers above its intrinsic value and reaches closer to my price target of $155 per share, I will likely sell my AMD shares, take the gains, and reinvest the capital to buy more Nvidia and Broadcom shares instead. The main reason is this: I prefer Nvidia and Broadcom much more than AMD in the AI server market or the AI accelerator market. I believe Nvidia will continue to dominate the AI accelerator market, maintaining over 80% market share in the long run because of its CUDA platform and AI software stack, which are nearly impossible to replicate. Broadcom is likely to become the second largest player because of its strong custom ASIC business. I believe AMD will eventually become the third largest player in the AI accelerator market because of AMD's upcoming AI product roadmap. Now, all these are only my opinions and my analysis that's based on my research. They are not financial advice. There are always risks associated with investing. It's very important to invest in what you know and not speculate. You will need to do your own research and do your extra due diligence first before investing anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.